Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your stock queries during the show. So please keep commenting on our live feed and we'll have your questions addressed by our guest. Before introducing him, let's see what the global handover looks like. European stocks, they ended higher after the ECB hiked interest rates by 50 basis points. Now, this is central bank's first interest rate hike in over a decade. Stock 600 closed 0.3% higher with financial services shares leading the gains. Wall Street clocked another positive session last night, but weaker than expected earnings from social media firm Snap has sent US futures in the red. Meanwhile, Asia is trading mixed as investors digest Japanese inflation data. SGX hint at a muted but positive start for domestic markets. Big boy RIL will deliver its Q1 report card today. We get you a detailed preview on the show. It's going to be an earnings-heavy weekend ahead of numbers. We put the spotlight on UltraTech Cement, JSW Steel, ICICI Bank and Infosys. Okay, let's get going and talk technicals with Hemen Kapadia. Good morning and thank you for joining in. If you look at the trade setup, definitely the SGX Nifty is hinting at a muted start. Asia right now is trading very, very mixed, so we can't say which way the markets will go. But if you look at the technicals of the benchmarks closely, what do you think we're bracing ourselves for?
A very good morning to you, Karunya. Thank you for having me on the show. I think this succinctly put it nicely. We are not sure exactly where we're going. We've had a very nice run-up, Karunya. From around 15.2 to 16.6, we had a 1,400-point run-up. Okay, traditionally 16,600 and 16,800 has been a resistance, a significant resistance. So we've just come to that level. Markets seem just a tad bit overbought. Why I'm saying tad bit is if you look at the hourly chart, Karunya, some of the mechanical indicators like the MACD, they have given crossover sales, but this is on the hourly charts. So one gets the feeling that a small period of consolidation could be around the corner. Currently, even yesterday, we posted a new high. So the series of higher tops, higher bottoms continues. But like you said, it seems just a bit iffy. And I think it would be healthy if the market cools off a bit, consolidates, and we've seen a couple of bullish gaps, Karunya. So one gets the feeling that that also might need to get covered up. So having said all that, keeping in mind the run-up, one would expect just a few days of inaction, sideways movement. On the other side, I think the dollar index has cooled off a bit. The VIX, which was 24, 22, 20, is now sub 17. So that gives a lot of confidence in the sense that, yes, if the markets do cool off, I think it would be a buy on decline.
Okay. How important will be the 16,600 level for the Nifty or any other technical levels that investors should and traders should keep a close eye on?
Well, we've seen some call writing also at that level, Karunya. Historically, there has been resistance. So yes, 16,600 is important, but there's a small area between 16,600 and 16,700. So I would be cautious. Last time we attempted to take out 16,700 was around 30th May. We were not successful. Then once again on 31st May and finally on 3rd June, we went above 16,700 but could not close below it. So Karunya, last time that we closed above 16,700 was on 2nd May. So popping into a congestion area, maybe it gets taken out at the first attempt, but one would say that a small period of trepidation, consolidation would make it better.
And you know, there are a lot of heavyweight earnings as well lined up today, tomorrow, and even on Sunday this time around. So perhaps ahead of that, you know, we could see some action on some of these counters. I want to first bring to your notice UltraTech Cement. Numbers are today. Volume growth is likely to be healthy. Of course, one must factor in that last year the base was quite low. So on that low base effect, we could see good, healthy volume growth. We're expecting mid-20s, sort of decline as far as the profitability is concerned. Of course, input cost continues to be a hindrance. There's also muted demand from the real estate space as well. Revenue, we're expecting 20-25% growth YOY. But on the technicals, good 1,000 rupees added last 1 month. Do you think this upward trajectory can sustain, especially ahead of numbers? What kind of a move do you predict?
Yes, Karunya. Like you mentioned about UltraTech, we have had a 20% up move from the lows. 20% is quite a lot, and everything seems hunky dory. But we've run up for 5 weeks in a row, so I would be cautiously optimistic. We don't have a cement index per se to get a snapshot of the whole view technically, but yes, high tops, high bottoms above the 55-day exponential moving average. Karunya, the weekly and the daily and the weekly mechanical indicators are in crossover buy. So we are safely ensconced in an intermediate up move. But after a 20% move, just around 60 to 50 is where we could see resistance and some turbulence coming in.
Okay. And what about JSW Steel, another big name from the metal space, going to be delivering its Q1 report card. We're expecting volumes to grow year on year, but imposition of export duty, higher prices, input prices, these are something that could dent volumes as well. And they have seen price hikes as well, which has sort of, impacted demand also to some extent. We're expecting profit to slump anywhere between 45 to 65%. Revenue is likely to take a hit. There's been lower offtake, which is at play here. But if we look at the last 1 month chart as well for JSW Steel, very inconsistent. Last 2 months, flattish returns sort of, generated for the investors. So what lies ahead? Because most people we've spoken to about metal space, whether it's a mid-cap name or a blue chip company, they've all recommended an avoid. Do you also concur?
Well, frankly speaking, half of it yes, half of it no, Karunya. I think it was very clear that metals was one of the sectors which was affected very badly. And we've seen stocks like Steel Authority come down for 14 months in a row. Tata Steel, everything has, fallen off a cliff, so to speak. But metals have posted a short-term bottom. I think IT was the same. IT has posted a medium-term bottom, but coming back to metals, specifically JSW Steel, like you mentioned, Karunya, there has been a little bit of underperformance. Vedanta bounced back. Maybe it's riding piggyback on the 19.5 rupee dividend that they declared. But 9 weeks, JSW Steel is in a range between 520 on the downside and 600 on the upside. So there has been a tad bit of underperformance. Okay, metals haven't done well, but Hindalco, Vedanta, they've all started bouncing back. And JSW Steel have been lagging, Karunya. So valid point. So currently, I'm not sure if there is a directional bias. But yes, after 9 weeks of a clearly defined trading range, I'd say even if the results don't pan out like you're saying they would, there is very strong support at 560 and major support at 540. But after 9 weeks of doing nothing, I don't expect a major breakdown. But yes, if anything has to come up in terms of surprise positive in terms of charts, till we don't see a weekly closing about 600, stocks going nowhere.
Okay. What about ICICI Bank? Good numbers expected this time around. Of course, one will watch out for the commentary on recovery of assets, asset quality, restructuring. But largely, if I look at the preview of the headline numbers, looks like it's going to be a steady set. ICICI Bank, good 15% gains last 1 month. What is an important level to watch here? Because for those who perhaps couldn't buy it at 600, 620, 630 even, good time to enter at 780, 790?
Ideally, one would prefer to wait for a small cool off, Karunya. 6 weeks in a row, the markets have done well over the last few weeks. Standalone ICICI Bank has moved from 670 to 790. So once again, it's been a 20% move over the last 6 weeks. Levels 779 was important resistance. We're quoting above that, so now that would act as support. The next important weekly resistance level is 820, Karunya. So coming back to your question, yes, if somebody wants to buy, they fear of missing out. One, I would suggest please wait for a cool off. Ideally, somewhere between 760 and 780. And if you're still extremely gung-ho about the stock, don't commit at one go. Spread your purchases because, like I said, 20%, 6 weeks, somewhere a little bit of profit booking could be lurking around the corner.
Okay. What about Infosys? Sunday, the numbers are going to be out, and we're expecting decent gains actually, but largely the IT pack has been weak, and the reaction post the numbers for some of these blue chip names has also been fairly subdued, if not very, very weak. Talk to us about Infi and how the technicals are placed.
You hit the nail on the head, Karunya. I feel on pure technicals, the mid-cap IT, at least on pure technicals, looks much better. Okay, the LTTSs, the LTIs, the Mindtrees have also moved. I guess Tech Mahindra and maybe a Birlasoft and Coforge should follow suit. But coming back to your question, yes, TCS broke the earlier bottom. So did Wipro, so did HCL Tech. Infosys is the one of the only marquee IT stocks which didn't break the earlier bottom posted last month. So a little bit of relative strength coming in. Pure charts looks fine. We have been moving sideways in a large range between 1370 and around 1550 Karunya for the last 4.5, 5 weeks. And okay, the positives. Technically short term, looking positive. Positive divergence, higher tops, higher bottoms, crossover buy by the oscillator above the 55-day exponential moving average. Everything seems to suggest that unless there is a major meltdown in the results. I think after the last result, we saw a major decline. Unless something like that happens, I would be more positive than negative. Levels, support comes in at 1520, 1478. I believe we should be slowly gravitating towards 1600 and more, Karunya. Yeah.
Okay. What about big boy Reliance Industries? Today, it will be the cynosure of all eyes, and we're expecting very strong Q1, largely driven by sustained growth in the oils to chemical business. We'll do a deep dive into what to expect. But if we look at the technicals, rather muted, I would say, because I think 2 months back in middle of May, the stock was around 2500 levels, and that is exactly where it's still perched at. What kind of a momentum do you foresee here?
Absolutely, Karunya. We've been range bound, like you said. 2369 on the downside, 2850 on the upside, and this has been the range for Reliance. This is the 4th month running. A couple of important points to note. 2369 has been a source of important support, Karunya. We've not broken that in the last 4 months, and I believe that is crucial. If that breaks on the weekly chart, I think there could be trouble around the corner. Currently, that doesn't look like happening. We've seen a short-term bottom from an oversold situation. Indicators have turned positive. But I believe we are slightly range bound. I don't see a clear directional bias as of now. 2369 on the downside is the level, I would say. On the upside, 2570. So I believe we would be in this range unless there is a breakout on either side. Currently, a downside breakout looks slightly difficult.
Okay, Hemen, request you to stay on with us. I want to get in my colleague Nisha Poddar to discuss how RIL's Q1 report card could pan out this evening. Nisha, thank you for joining in. I know you track the company very, very closely. Remember in FY22, the oil to chemical business revenue hit an all-time high, and this time again the street is betting on this particular business to drive the earnings. So tell us exactly how has Q1 panned out and what to expect.
Right, Karunya. Thanks so much for having me on the show. Now, definitely the oil to chemical business is going to perform very well in this particular quarter, especially given the thrust in the fuel prices, and globally also the gross refining margins, especially in Singapore, have improved substantially. So what the polls suggest, and a mean of most of the brokerages reports, showed that revenues would be up by 14.5% to 2.37 lakh crores in terms of revenues. And when it comes to the profit after tax, they are giving a jump of 50%. Now, here I would like to temper the expectations a slight bit. The two estimates and two aspects that most of the brokerage firms have been accounting for they have not accounted for probably the headwinds and cost escalations because of inflation. which could erode the margins a slight bit. And on the other hand, they have estimated that the discounted price crude procurement is what the company is managing to do, which is going to enhance their profit as well as profitability. So I would temper the expectations a slight bit. Most of the brokerages have suggested 24,000, 25,000 crores of profit for this particular quarter. So yes, very strong numbers expected, but definitely a slight bit of erosion in terms of profit coming in from the other headwinds, and not as huge a discount to the current market prices of crude. So this is one aspect on O2C business. Also remember that the windfall tax, a very big event in this particular sector, has only kicked in this particular quarter, and then that will start kicking in for the next few quarters. So this quarter driven by O2C business, but Jio as well as retail will also have a huge amount of contribution, Karunya.
What about Jio? How is that likely to pan out? Because according to, whatever reports I've seen, subscriber addition has been modest. But what has been the quantum of tariff hikes, if any, and ARPUs that are likely?
So ARPU improvement is definitely there. And in fact, subscriber addition, even though modest, is a very, very important sign right now, and a very big bump up. Because remember, for the last 3 quarters, the company has been losing its subscriber base because of chip consolidation and tariff hike. Remember, the industry had taken around 20% tariff hike a few quarters back. Now, the subscriber lost in the last 3 quarters were a little over 30 million subscribers, while for this quarter, 4.5 million subscribers are going to be added. They would be ending this particular quarter with a little over 414 million subscribers. So it's a very big sign coming in, and ARPU improvement has also been impacting the revenues as well as the profits of the company. So revenue expectation is about 21,600 crore rupees, which is an uptick of 3.5%, while the PAT figures a little over 10% bump up to 4,615 crore rupees. So for Jio, with chip consolidation going out of the way, it will give a lot of positivity to this company's performance and future outlook, Karunya.
Okay, Nisha. Anything else that you want to flag off that investors should keep on their radar when the commentary comes out this evening? What should they be watching out for?
So retail is also a very important aspect, and this will be the first normal quarter without the unlocking because of COVID and the pandemic situation. So revenue is going to increase to about 60,880 crore rupees. EBITDA is supposed to rise by about 8% for that business as well, and more footfalls in the stores can be expected. But overall, if we look at Reliance Industries, of course, the company's commentary on crude outlook going forward, because it's cooling off, will be significant. But remember, we are also getting into the AGM season, and big announcements there, as well as succession planning. Remember, in Jio, Akash Ambani has taken over on the board, and Mukesh Ambani has stepped down. So more succession planning in other companies will be very keenly watched out for, though not expected in the results. And third, of course, remember, value unlocking. In 2019, Mukesh Ambani in the AGM had said that value unlocking and IPO will take place in the next 5 years. Right. So Jio, with this leadership change, is it going for an IPO and value unlocking in the next couple of years? Even Reliance Retail value unlocking. These two watched out for an new energy business that they had announced in the AGM last year. Whether there are any announcements on that. So these would be very important aspects which will impact the stock and the outlook going forward.
Okay, Nisha, lots to watch out for. It's going to be a very eventful Friday evening then for all of us and for people who are invested in Reliance as well. Thank you so much for joining in. Let's once again bring back Hemen on board. Hemen, any of these earnings candidate that look like a winner on the technicals, even a Kotak Mahindra Bank, which I left out of my list earlier, similar trajectory seen as ICICI Bank for this one. So any of the big outliers you foresee within these heavyweights?
ICICI Bank that you mentioned, Karunya, is really much sounder in the sense a lot of relative strength coming in. Kotak has been a little bit of an underperformer, and that still hasn't changed. The bank index, Bank Nifty has done well, Karunya, over the last few days. So is ICICI Bank. but Kotak has been off the highs, near-term highs over the last 3 days. So that lagging feeling of a little bit of underperformance hasn't gone away. So if I were to flag out, like you mentioned Reliance, you mentioned ICICI and Kotak, longer term point of view, Reliance is unequivocally in a longer term uptrend. No two ways about it. But from a slightly near to medium term view, despite me expecting some resistance at high levels, ICICI Bank is relatively the strongest of the lot.
Okay, quickly, let's address some of the viewer questions as well. First up is Muthu, who has written to us, wants to know your view on SBI cards. Good gains seen here in the last, 1.5 months. But is that momentum going to sustain?
I think so. It's just that I think it sounds like a little bit of repetition, Karunya. We've had a 20% move. We're walking into weekly resistances between 885 and 900, but the technical picture has improved. I mean, we seem safely ensconced in an up move, and that hasn't gone away. So notwithstanding this important resistance at 885, 900, I believe outlook is positive and we should expect further upside.
Okay, what about Tata Motors? We have a query there from Arnav Sarna. He's saying Tata Motors is trading near major resistance. Can we expect the price to go near all-time high if that breaks? So what is it that you foresee?
Yes, if you take a slightly longer term view, I think we'd be comfortably above its all-time highs. From a slightly near-term point of view, almost 16, 17 weeks of a sideways momentum. We are at 455 as of now. The level to watch out for, I believe, is 468. But yes, I think we've seen a nice base formation and the stock seems set to take off. So actually, above 468, we could go somewhere to 500 plus. So looks extremely technically positive, Karun.
Okay. Next question is on PVR. Subramaniam wants to know your outlook for PVR, especially after yesterday's results. If you look at the 3-month chart, last 2 months have been very slow, very sluggish. But last 1 month, the stock has seen some momentum coming by. Even the numbers for, for the quarter gone by were fairly good, which were delivered by PVR. What's the way forward here?
Looks just a tad bit heavy.
Okay.
Yesterday's result-related price action has been slightly severe. Just before that, we were forming a rounding top, which is basically a bearish pattern, Karunya. But for that to fructify, we would need a close value 1860. That's not happened. So once again, we've been here for around 17, 18 trading sessions. 1940, 1860. So if we close about 1940 for a couple of days, then we see an up move. And if we close below 1860, then that would mean that we come back below 1800. So a little bit of a crossroad, getting slightly heavy on the near term.
Okay. What about your own picks? Which stocks are you focusing right now and perhaps would like to recommend to our viewers?
Actually, I would have loved to give something on IT, but frankly speaking, everything has shot through the roof. So on decline, it's a buy, but a buy on Amara Raja battery, Karunya. Sideways movement, we are breaking out from a rectangle pattern. Indicator support, positive divergence, weekly turnaround seems to be underway. So a buy on Amara Raja battery at around 480, stop loss 468, target 504. Secondly, a more conviction buy call on Deepak Nitrite, Karunya. We've once again gone down very sharply from 3,000 to 1,700. Now we've seen a base formation. We've seen a volume which is highest in the last 35 trading sessions almost. We've seen a volume breakout from a consolidation phase. So Deepak Nitrite looks extremely interesting. One can buy Deepak Nitrite at around 1850, stop loss 1780, target 1990. This is a slightly modest target. I believe we should be going to 2100 or so over the next couple of weeks.
Okay. All right. We have a couple of minutes more. I think we can address one or two more of our viewer queries that are trickling in. Vijay Prakash has written to us, wants your view on Ashok Leyland. Can you quickly tell us how are the technicals placed?
Short-term, medium-term, long-term uptrend. Major resistance at 150. We need to close above 152, to continue further. Looks fine.
Okay. All right. Thank you so much then, Hemen, for joining in and addressing so many questions that our viewers had and talking to us about all the earnings candidates, because all eyes definitely will be on how their report card plays out, what the commentary will be like today, tomorrow and day after. Thank you so much for joining in. And guys, that's all we have in this edition of Morning Trade. Thank you for tuning in. Stay with us. Markets with Santo and CJ comes up next.